I am Elise Soucie Watts. I'm the Executive Director of Global Digital Finance. We are a nonprofit industry association, work with a broad spectrum of members across the digital finance ecosystem, many of whom are here today. But today, it is my great pleasure to moderate, and we are going to get right into it with a fun game. So when I pitched this in the prep call, I was met with a couple of confused stares, but also Kene laughing loudly, and so we decided to go for it. Some of you might be familiar with the playground game Kiss, Marry, Kill. No? For those in the room who are not, we will be doing that with AI, custody, and digital currencies. The idea is that the thing that you would kiss is the one that you like, but you don't really see it going the distance. The thing that you would marry is the thing that you think has the most lasting power in the long term and that really matters, the most important of the three. And the thing that you would kill, well, that's the one that you could do without. That's the one that you don't like at all. And now this is a little bit controversial because I think most of us on the panel actually agree that all three of these things are important. But for the sake of a bit of entertainment today, I'm going to hand over to my panelists to tell us which one of the three they would kiss, marry, or kill, and also introduce yourselves as we go and tell us a bit about what you do, but also why you made those choices. Varun, can you go first?
I get to go first. Okay. You can all hear me. I'm Varun Paul. I am a senior director. Can you hear me? No? Should I speak louder? Or can the mics pick me up? Yeah? No? No mic?
I think
I'm being silenced.
Already?
Already. I haven't even said anything controversial. Are we good now? I think it's a little bit louder, maybe. A bit louder.
Oh, now you are.
Yeah?
Yeah.
Yeah? Good. Okay. I'll speak down here. Okay, I'm Varun Paul. I'm a senior director and business lead at Fireblocks, and I cover central bank digital currencies, FMIs, and blockchains. Fireblocks is a digital asset custody technology provider, so I can't kill custody. In fact, I think I'd argue I've already married custody. I'm in the company that does the custody technology, so I've made that decision already. Now, given what I'm about to talk about, I think I'm going to have to, although I'm really reluctant to do this, I'm going to have to kill digital currencies and kiss AI for the sake of this panel.
super.
Okay, great. Maria Minaricova. I'm the Director of Business Development at Fetch.ai and the board member at the Fetch.ai Foundation. We are based in Cambridge, and we're working on developing infrastructure that can support decentralized AI agents. So anyone will be able to build their own products, services, solutions using agents. These agents need to be decentralized. They need to be able to function cross-chain, so settle on any blockchains, work across any blockchains or regular Web2 ecosystems. So that's what we're building. So that will enable you to build federated machine learning ecosystems and so on. So I definitely need to marry AI. I would love to. So I'm in for that. AI and quantum, but that's a different story. Maybe 5 years from now.
Different path.
Quantum. No, but yeah, and I also have a difficult choice, like the other options. What do you kill? But I am with you. I think digital assets, or actually, it was the real world assets, right?
Yeah.
I think
Yeah, we can narrow it down.
So that's difficult. So I think maybe I'll keep those and I'll kill the custody.
Fair enough. Hi, I'm Kene, Ezeji-Okoye, one of the co-founders of Millicent Labs. We are building a custom public blockchain for compliant on-chain finance and tokenized real-world assets, as well as tokenized forms of fiat currencies. We've had a number of engagements with BIS, Bank of England, and some private institutions as well. We'll be live early next year in public form, so I invite you all to check that out. And that being said, I'm obviously married to digital currencies and real-world assets because obviously I wouldn't be building a business in the sector if I wasn't. I think I will kiss AI. I think it's going to be really powerful, and we'll probably dive into this, but as an accessibility tool. And I'm going to have to kill custody because blockchains make self-custody possible. So why do we need someone else to do it for us?
It's not looking good for your spouse, Varun.
Have to have some defense in a bit. Come back.
Last but not least, Adam, please tell us what your views are.
I was thinking if I went last, I would be able to choose the one that no one else had, but of course I'd sort of failed to appreciate that we would have covered all the options. Okay, I'm going to say I
Oh, and don't forget to introduce yourself for those in the room as well.
am Adam Jackson from Innovate Finance, Chief Strategy Officer of Innovate Finance. We're the trade association for all things fintech in the UK. We cover the entire ecosystem of all financial services and technology, and therefore increasingly digital assets, AI, real-world assets, custody are all issues that kind of all of our members are looking at, as well as those in particular aspects. My flip answer is to kill custody, speaking as if I was a regulator or a member of the government in the UK, because we're still waiting for the regulation for custody, even though it's such an obvious area for the UK well, it would have been to take the lead, but at least to be at the sort of advanced guard of providing clarity and certainty in an environment in which we can all trust digital assets. So I suppose if I'm pretending to be someone from government, I haven't quite killed it because it's still going. But you know, if anything, we need to reverse that. I know that doesn't quite answer the question.
We'll give it to you.
Yeah, I think I would. Well, okay, I'll marry real-world assets because at the end of the day, those are the things. Those usually are the value cases. You know, what I want to marry is the long-term use cases, benefits, and that's the heart of it. And we probably need to talk about those more and how they're then transformed by the technology. So I will kiss AI on the basis of, you know, provides the magic dust that can then, with digital assets, combine to create value. But, you know, you should always be careful about who you kiss and think about the consequences afterwards. So don't just rush into it.
Fair enough. So two votes for real-world assets being the most important, one for custody and one for AI, though a lot of kind of interest in AI. So Maria, I want to come back to you then after that kind of fun intro from everyone. Thank you for sharing your views. Can you tell us a bit more in particular why you and the work that you guys are doing feel that AI is so important, and also about that interaction between blockchain and AI, in particular as that relates to provenance and federated learning?
Yeah. Sure. So I would encourage everyone to look at agents. So for the last 6 years, I was the only one talking about agents coming to these, you know, events, and everybody's like, agents, like, who cares? Like, but I would encourage everyone to look at the top AI companies, top big, you know, regular tech companies, NVIDIA, OpenAI, even Google. Everyone's talking about agents. So the world is waking up to this new technology. And I'm really excited about that. What I would like you to encourage, though, when you look up those companies and think about that, what you need to keep in mind that agents are going to build multi-agent systems. These are multi-stakeholder ecosystems. And what you need to have is big interoperability, so being able, you know, to have your agent have any technology or just about any technology. Any AI built into your own agent, and your agent should protect your own data, your privacy, and everything. So you can achieve that by having decentralized ecosystems, so to support these AI agents. So they should not be registering in one central database like these Web2 traditional, you know, big platform companies, hyperscalers are building for their platforms. But the agents, as we're building them, they are registering in a smart contract on the blockchain. And that allows you basically that decentralized governance of the ecosystem, of the underlying layer. And how then individuals, companies choose to use the agents and build their own products and services around that and above that basic layer of the agents is up to them. Right, and so that's what we're building, and that's what I would like you to think about more and more. And there are really interesting use cases coming up, not only in the world of I work a lot with mobility supply chain, where there are large number of stakeholders, but also in the financial industry. We're building a platform called Metalex, where everybody who's going to be participating in that platform will have their own wallet. So we're Fetch.ai is a Cosmos-based blockchain, so you'll have your own Cosmos-based wallet, but you will be able to trade with the other participant in a peer-to-peer way. So there will be digital assets across various blockchains, and I'll be trading with you peer-to-peer, using our agent. So I'll say my agent, let's look at it like a pound and euro example. So I'm going to Europe, so I need euros. You're coming to Britain, so you'll need pounds. And I'll say, here's my rate. This is, I'm looking to buy, I don't know, 10 pounds for 10 euros. So just an example. And you'll be looking to do the same the other way around. So my agent will go and will look for that other partner, that trading partner, and then we will, then we'll have that communication, that negotiation, and that transaction happen, again, on peer-to-peer. So if you look at DeFi, this will basically enable you to get rid of the liquidity pools. There will not be need for any liquidity pools, zero slippage, and all these other financial burdens that come with current DeFi and trading in the system that we have at the moment.
Fascinating. Well, thank you so much. And I think it's clear that the interconnectedness is there. It's good to see, I think, that these topics coming together, even though at first I did have a couple of people tell me it was a bit of a random collection of words in the panel title. I think, but it's clear that these things do go together. But Varun, I want to ask you to build on this a little bit more as well, which, you also had one of the least chosen as most important. So I defend it a little bit. Why does custody remain so important? Tell us a bit more about that. But also, if you could maybe pick up on some of the things that Maria noted too. So do you agree that AI is crucial to the digital finance space, but in particular to payments? And I think to Maria's point, what are some of those challenges that you think could be solved by the interconnectedness of blockchain and AI?
Yeah. Okay, so let me defend first. Kenny's right. The whole point about blockchain is that you can self-custody. But that is custody. Go on again.
Oh, he's back.
Better? Better, there, all right.
Maybe just hold it.
I'll hold it up. Hello, better, okay. Some form of custody is still custody, so that's my defense. And custody technologies,
Maybe like unhook it and...
Custody technologies are...
Okay.
Thank you. Custody technologies? All right, let's try and hold really still. It's definitely not me. I'm not doing anything wrong.
Doing a great job. Don't worry.
Okay, let's try again. Custody technologies. Oh wait.
I see Helen coming.
Do my challenge, Annika, a bit and down.
Thank you so much.
Thank you.
On the side. Is there a button there?
On the top.
There? Okay, can you hear me now?
We're ready.
Brilliant. All
ready
right.
for the defense.
So the defense of custody technology is that, as Kene said, self-custody is still a form of custody. Blockchains do enable you to hold your own assets, and that's really important. And custody technologies like the one we have at Fireblocks enables individuals to take ownership of their assets. So I guess what I would say is, simple, quick defense is, you don't necessarily need a financial institution to help you own your assets anymore, and that's really powerful. But everything I'm going to talk about still relies on an ability to hold something in a wallet, an address that ties you to a smart contract or ties you to an asset or even an identity. And that's what we should talk about when we talk about custody, not necessarily large custodians. The interesting thing about AI and blockchain is that, so when I left the Bank of England 2.5 years ago, the last thing I was doing was AI, and we were working on ethics in AI and the AI Public-Private Forum. And in those 2.5 years, clearly the world has moved on massively. We weren't even talking about generative AI at the time, and we weren't even talking about agents, and it's just rapidly moved forward. And as this has happened, it's got me thinking more and more about how it could be relevant. How do you bring these two things together? And Maria's just given us a really good example of how that could happen. I was thinking the other side. How does AI support, just to your point, how does AI support digital assets, digital currencies? Where are the two going to come together in a use case? And one of the really interesting things is that when you think about payments today, on the rails we have today, they're pretty simple in what you can do.
So one of the things that, one of the biggest innovations in payments has been ISO 20022. It's taken 20 years to get here, and it's extended the length of the message that you can carry on the payment rail. Fantastic. What are you going to do when you've got an Internet of Things world and your fridge and your microwave and your oven are all communicating on the internet, and it just so happens they're ordering things for you on behalf of you because your fridge has dropped low in terms of your supply of milk or whatever? What are you going to do when you've got AI agents that need to operate on your behalf in fractions of a second, communicating with everyone else in your family or your friends, and how are you going to operate that scale on today's payment rails? And I don't think you can. I genuinely don't think today's payment rails can operate in that environment. So the really interesting thing that we've been working on just as a concept, and we're pitching in a competition, is that what do you do if you want to have this situation? We've all got AI agents. The 5 of us decided we're going to go on holiday together, and we want to figure out what's the optimal time to do so. Where should we go? And all of us are going to operate through an AI agent and say, well, look, this is my preferences. You know when I like to travel. You can see my calendar. I'm not going to bother going to give you the dates. Optimize for everything we've done. And as it does so, maybe it's going to have to do some conditional payments, some escrow payments that says, actually, I'm going to optimize across these 5 things, but I might have to come up with a series of different scenarios. We might choose to go to, let's say, to Africa in the summer, or we might choose to go to Latin America in the spring. And it'll lock up all these different scenarios and then present to us and say, what do you think about option 1, 2, and 3? And as it does so, it might need to then release some of those funds. But it also, coming back to the digital currency thing, might need to operate with many different types of payment methods. Maybe you're paying the airline in the airline's stablecoin. Maybe you're paying for the fuel duty in a national currency's digital currency, a central bank digital currency, and maybe you're paying in a tokenized deposit for some other part. Maybe you're splitting payments across the many of us. The point is, some of the really interesting use cases we have for digital assets and digital currencies require this level of programmability and this complexity that is entirely consistent with what we're seeing in AI today. And that order of complexity, I think, is going to be necessary to operate on blockchains. And for that reason, I think we need to be building central bank digital currencies on blockchains as well.
That was a very comprehensive defense. So thank you for that. But I do want to, since this is the digital currency conference, I do want to keep going on the RWA thread and maybe come now to Kene. And let's kind of take that a bit further. And you also mentioned, I love the example of it kind of being all of us, because a lot of times when we talk about RWA, we talk about it from a capital markets perspective, wholesale settlement, et cetera. And I'm guilty of that too, coming from a capital markets background. However, let's think about this a bit more from the retail perspective. Should we be doing more so that this kind of future world we can get there, to get RWA into the hands of retail customers? And what does that look like?
Yeah, I think that that's one of the main points of getting tokenized assets onto blockchains, is that it reduces costs, reduces intermediaries, and can get things into the hands of participants who are otherwise kept out of the system. One of the reasons why AI is interesting there is that it can help people understand these financial decisions that they might want to be making and give them some coaching or some advice. We've partnered with a firm called Ember AI. They do a kind of text-based chatbot for financial decisions. So it can say, if you have $100 of USDC and you would like some yield, you can ask it, and it will say, you could do X, Y, or Z, and would you like me to execute that for you? And they're live already, and for a retail participant, that's great. I think regulation is also a big piece. In the EU, they really like to regulate things, and AI and blockchain is definitely at the top of that list at the moment. But we've seen a firm, Midas, they're a firm regulated out of Germany and Lithuania, and they're able to do tokenized securities and tokenized structured product issuance directly to retail. So bringing that primary issuance level from 100,000 euros down to 1,000 euros. And so that really opens the door for more people to participate. But it can still be quite complex. So I think AI today, maybe not quite at the agent level, but at that chatbot or helper level, will then get us to the world that Varun's describing, where these AIs are acting on our behalves. And obviously, all of this needs to happen on crypto rails. And I would argue that the blockchains that we use should be as public as possible for a number of reasons, not just for accessibility, but also for verifiability. If a central bank is launching a CBDC, I want to be able to see the code or have someone else that I trust be able to verify the code and know that the chain and the programs are going to do what they say that it does. And as things get more and more obfuscated with AI, we're going to want more decentralization and more verifiability of what's actually going on behind the scenes so that we know things aren't being taken completely out of our hands, dragging us down the wrong direction, that we still have control via decentralized governance, as Maria said, that can shape the way that these things behave on our behalves.
And I mean, we've talked about this many times, but there is a lot of kind of fear, I think, sometimes of, especially in regulatory spaces, of permissionless and, you know, public blockchains. But actually, to your point, this can actually help solve and mitigate some of the resilience challenges and making sure that appropriate, you know, due diligence is done. But first, I want to pause because we have a very important question. Maria, can you please rewind for a second and define for everybody what an agent is?
Simple definition, it's a software program that can act on behalf of its owner to achieve goals and economic activity. So as you said, fridge, IoT devices, they can all have an agent and will have an agent that acts on their behalf. Vehicles can and will have you know, agents, and they will be talking to the charging stations. They will be booking your hotels as you drive through, you know, Europe or some other place, and you don't have time because, you know, you're driving. You have 2 kids in the back seats, and it's night, and you want to stay over in a hotel, right? So what are your options? You'll park and look for it for half an hour for a hotel, or you'll let your car do these things and manage and optimize the journey. So at the end, it's about optimization, as you mentioned. So there are many choices. Which ones are the ones that we would like to have? That they are personalizing our experience and making it better for us from the thousands or millions of options that are out there. And we don't have time to go through all of those options. That's what AI is good for. You know, we just give our agent a command, say that I want to go to, I don't know, holidays 500 meters from a beach and something, and it will look through all the various options and gives us the ones that are relevant for us. So agent is like your digital AI assistant that can represent you services. It can also represent algorithms, and there will be a large marketplace of these agents, and you will just be able to pick and choose based on your objective.
Perfect, thank you. And before we move on to Adam, I actually do want to ask Kene one of these questions because I think it's linked to what you were saying, which is how does the combination of digital money, tokens, AI, digital custody affect investors, and will we see the rise of more personal or experiential investing? Any views on that? I think it's a bit linked to the kind of what you were discussing before.
Yeah, it ties back into what I was saying earlier. I think to answer the personalized investing question, definitely, because these AI agents and AI models will probably know more about you than you know yourself. And they will be able to help you make decisions that you might not know that you want to make or you might not know is an option. And so it really does break down the barriers and enable these things to become more interoperable and more accessible to people from all different levels of sophistication.
Super. All right, now Adam, round us out. At Innovate Finance, you very much have a bird's eye view on what matters in the tech space, where innovation is occurring in the UK as well as globally. So where do you see the future of digital currencies going, coming back to RWA and the Digital Currencies Conference? And do you have any key trends for us to watch out for besides AI? Because I think we've covered that roundly in 2025.
Yeah, I think 3 things that we're seeing, and particularly seeing in the UK. And if you like, they're the sort of different levels of the ecosystem. So there's clearly the financial markets infrastructure is being put into place. So in the UK, you know, we have finality in terms of payments. We've got tokenized payment systems up and running. We've got Bank of England, FCA, Digital Securities Sandbox, and people like ClearToken. I know Innovate here as well. They're working with people around that. That we're starting to see, if you like, that kind of the 2 big bits of infrastructure that's needed for transactions, which I think then link to digital payments, you know, on the tokenized asset side, on the payment side. So I think in the UK, within a year, we start to have those 2 major bits of plumbing that then allow all of the innovation that people are thinking about in terms of how do I then use those for doing the transactions, for utilizing custody, for creating value for consumers. I think then a bit in the middle, which we don't tend to talk about in terms of digital assets, or digital pound, but we should have, possibly even tomorrow, a smart data bill in the UK, now enabling the sharing of data with the consumer's consent, data that's currently held by proprietary, usually large firms, building on the principles of open banking. That's what we need for quality AI, because it's usually a higher quality data. And so once we unlock that data in the UK with smart data schemes, then we can really start to see some of those amazing applications of AI that enable programmability and then link off the kind of the spine of infrastructure. So I think those two bits mean we're starting to get to the point where we've really got some strong basics for all of those services. I think the final thing to think about, and maybe it then becomes maybe more particularly relevant to digital payments, is in terms of wallets. And again, there's quite a lot of thinking in the UK. The Competition and Markets Authority is just the next block from here. They're thinking about wallets as a whole, and they're tending to think about wallets in terms of how they've used so far in terms of payments. But certainly some of the thinking we're trying to do with people like that, with the FCA, with the PSR, and our members are bringing to the table, is increasingly your wallet is going to be where you have all of your different payment mechanisms, and it's certainly not just going to be, as it is at the moment, a kind of payment card rail plug-in. It's going to be where you keep your digital currencies, your stable coins. You're also going to have your digital ID there. So it becomes that sort of entry point. And therefore, I think thinking about what that means for some of it then gets to infrastructure, but how that works. And I think that then finally takes us to the real world asset piece, which is if you're using your wallet, you then, if you want to use it to pay with digital currency in a store, we need point of sale, actual hardware. We don't often talk about that, but we need a physical thing in a store that you can use your wallet with. If we want to be able to change it into cash, we need cash machines that then have a link into the digital asset world. So I think that's maybe the longer term piece, but thinking at it, we've got the plumbing, we're starting to have the basis for the applications, and then actually we're back to maybe where fintech usually starts, which is the consumer end. There's more work to be done there.
I love that point about the hardware, actually, and I think that is like people often forget about it. And actually, I was discussing with a couple of you guys in the coffee break as well, is about actually the ability to have these kind of different currencies and have them be interoperable. You also have to have the acceptance from whoever is accepting your payment, and part of that is hardware. And I think this actually goes well with one of the other questions I saw, which is they have Bitcoin started as a P2P electronic cash system. Now with banks, exchanges, on and off ramps, custodians, oracles, etc., isn't the digital asset landscape, I'm guessing, becoming more complex? Absolutely. I mean, I think everyone on the panel would agree with that. But to some of the points mentioned earlier, and Varun, you gave the example about different types of payments happening in different ways. That doesn't actually have to be a bad thing. And I don't know if you want to pick that up a bit more about why that complexity isn't necessarily something we need to be afraid of.
Yeah, I think in reality, that was the most pure form, right? And if you want to get large-scale adoption, you're going to have many different types. And consumer choice is a really important part of that, but there's also lots of different use cases. And there are lots of use cases that Bitcoin isn't suited for. So whether it is the cost of transactions or the speed or many different other things like programmability, I think that complexity is natural as the system evolves. What is then really important is that in order to get the next billion users we often talk about, you need to be able to simplify it further so that it is accessible for the average person. And at the moment today, just the wallet infrastructure, the blockchain, is still very complex. We heard in one of the other panels, still very complex for your average person to use. So we will get this level of complexity as it evolves, and I think at some point it needs to simplify to bring in the next wave of people.
Fair enough.
Good. Go ahead.
I was just going to say, I don't know. If anyone's ever bought a house, it's a really complex process that is totally not digitized, and that you've got all these different records in different places. That's just one example of where digital assets that could make life much less complex. So for the consumer, this is going to reduce complexity, but it is about replicating all of the systems in the digital world.
Absolutely, and I think, Kene, please pick up, but I think the other part of that as well, and we talk about this sometimes too, is that means also those other systems have to digitize. So I was having this conversation with the post-trade where, yes, there's all these advancements that can happen in post-trade, but you have to remember the pre-trade as well. And if that's still on paper, it's no good giving everything else to digital. But Kene, I know, did you have some thoughts on this too?
I was just going to make a small analogy that blockchains are essentially building a new internet. And we're in the kind of Netscape Navigator phase. And we haven't yet gotten to what Varun's talking about, which is like the iPhone phase, where everything is abstracted and you can do all these things without thinking about it. But if I date myself and think back to 1993, the internet's built on TCP/IP and HTTP, and you've got SMTP for email. Nobody knows about any of that, and nobody cares, and they don't have to, because you can use your iPhone to watch Netflix, and you don't need to know anything, and digital assets will get there. AI will play a part. We're building the plumbing right now. We're not yet building the experience that needs to be delivered, but we're close. The plumbing's getting there, and I think a few years from now, we'll get that iPhone moment and bring on the next billion people. Well, the first billion people to digital assets, to be fair.
Let's pick up one of these other ones with regards to plumbing then. So we have a question on, with unlimited growth in AI agents, is it essential to use proof of work, energy-intensive blockchains such as Bitcoin to impose costs on AI attacks? Maria or anyone else on the panel, any thoughts?
I don't think it is, but you're looking at me like you want to answer that.
No, I think it's a really good question, and I can think of both answers, but I'm keen to hear what you think.
No, I don't think it's necessary. Actually, on the contrary, I think it needs to be proof of stake, to be honest, and we need to have really fast transactions that are enabling all these, as you mentioned at the beginning, to enable all these different agents representing different things. So. But there will be a need for authentication of the agents. So, for example, what we're building is a structure or system similar to DNS, where your agents will have a name that can be verified. So there will be a need for that. So, and a system for that. But that's being built, right? And you will be, at least in adapting our vision, you should be able to take your Web 2 history, or not a history, but reputation, and build it into your Web3 agent. So that should be part of that. But lots of these scams and things are happening even in our world, right? I mean, in a day-to-day basis. I ordered contact lenses online, and that was a scam. That was a fake website. Just recently, simple things like that. Or people come knock on your door, or knock on the door, or usually of the older people, right, and trying to sell them things that don't exist, right? That happens. So, it will happen in a digital world. We'll have to, see how we can prevent it, in some reliable way. But yeah, so we just need to be all cautious and aware of these things. But anyway, what is your thought on that proof of work?
So I think the point of the question is, if you've got this many agents out there, could they overwhelm the system? And I think, therefore, the proof of work, the concept in the question must be saying, well, you need to put some barriers in, some hurdles in. Your point is that proof of stake is enough, provided you can also identify all those individual agents acting on behalf. And you can say that I've got a rigorous process here that can protect the system. And I think you're right.
So we've got an audience question just there. I don't know if we have a mic. It's okay. You can shout at us. Great question. And to be clear to all of my wholesale friends in the room, we still love wholesale markets as well. We just chose to take it that direction on this panel. But anyone want to pick that one up?
I think financial literacy is generally quite poor. I think a few years ago they did a survey of MPs, and only 15% could explain how bank deposits work. And these are the people running the country. So I think that making things more understandable is one of the key challenges to the financial system as a whole, not just the financial system of the future. But I think the tools that we've been talking about that are adding complexity in some ways will eventually get to that point where they do simplify things, make things easier to understand, and can help put up guardrails. With that agent that's transacting on your behalf might be a lot better at detecting fraud than my grandmother would be, for example. Almost certainly would be able to tell the telltale signs of fraud, or have a web of trust where different AI agents have interacted with others and build up a kind of credit score, for example. All of these things are fantastic use cases for blockchains because you've got the provenance of transactions going all the way back to the start. So when we move away from systems like cash, faster payments that are more opaque, and move to systems that can build trust into the model itself, which is kind of the point of a lot of smart contracts, is that they are trustless, that we'll move to a system that helps people be safer even if they don't fully understand everything that's going on underneath what they're doing. Well, I think that's covered by what I was saying. Well, I think the derivatives case is quite interesting because you don't necessarily have to know what you're doing. You have to be wealthy. You have to be a self-certified investor, which means that if I'm rich, I'm allowed to punt on anything that I want, but if I'm not, and I'm literate, I'm not allowed to do some things. And I think that's a really backwards way of looking at the world.
So I'm getting the time signal from Helen. I think that this conversation could go a lot further. I would close out, though, by saying that just as my personal view, even though I'm moderating and not meant to give my view, is that I think that a lot of education is absolutely needed. But I think that this needs to start at an early age, and there should be tech and finance educations in schools from very young age all the way through. And that's kind of the point of this literacy problem, not necessarily the products, but the questions are disappearing. Helen will kick me off. I hope you guys all had fun. We're all very happy. I think most of us will be here for the rest of the day, so we're very happy to continue the conversation. Thank you so much.
Thank you.